Hello everyone. Let's start our today's discussion. I hope you all remember that in previous class we had an introductory discussion on Advanced Audit and Assurance course. In our today's class we will start discussion on first chapter of our course, and that is Audit Planning. But before going in detail of this chapter, let's take a quick review of what we have discussed in our last class, which included introductory discussion on Advanced Audit and Assurance course. The first thing which we discussed in our previous class was that why students should be opting this exam in optional exams of ACCA. So the first reason of opting Advanced Audit and Assurance was its practical relevance to your job. Once you are done with ACCA and when you go for a job, either you go to audit firm or you go to corporate sector, your knowledge of auditing will be very relevant. Because when you go to audit firm, you are doing audit yourself. And if you go to corporate sector, you have to deal with the auditor, either an internal auditor or an external auditor, because a chartered accountant has to be in regular interaction with an auditor, either being an auditor or being part of management. Because when you are part of management, at that time also you have to deal with the concerns and findings of the auditor. Then this course has a short course, it takes lesser time as compared to other optional level exams in preparation. And this course also leads to additional exemptions in ICAEW. Only on the basis of Advanced Audit and Assurance exam, you get additional two exemptions in ICAEW. Then we discuss that what are the reasons of failure in this exam. Like when it has a short course, then why it has low pass rate. Why students fail in this exam. So the first reason is lack of past paper practice. Students go in the exam in an overconfidence that we will be able to do it. But when you talk about auditing, it is all about practice and making sure that your answers are impressive and up to the examiner's standard. So, lack of past paper practice and lack of tutor feedback. These are the primary two reasons of failure in advanced audit and assurance. And these both are the areas which we will make sure that we cover in our study approach. Like with every topic, I have given homeworks and I give personalized feedback to each of my students so that they can identify the weaknesses in their drafting approach, which helps them to improve their chances to pass this exam. And then at the end of the course, there are three mock exams also on which I give personalized feedback. Then we discussed that in advanced audit and assurance, the students also fail due to insufficient knowledge of auditing and accounting areas. The students assume that AAA will only include auditing knowledge, but that is not right. See, an auditor without accounting knowledge is good for nothing because an auditor has to audit the financial statements, so his knowledge of accounting is very important. And similarly, at AAA level, the examiner clearly says that I expect that the students are prepared well for accounting knowledge up till the level of SBR, the Strategic Business Reporting Level paper. And this is the reason why I always say that students should have at least studied or must be studying SBR along with the AAA course. We revise accounting standards also in our course discussion, but still, it is necessary that you must have studied those accounting standards earlier. Okay, then we had a discussion on paper composition. That AAA paper will be divided in two heads. One is technical marks, which represents 80% of your exam, and other is professional skill marks, which represent 20 marks of your exam. Now, professional skill marks are not a separate requirement. The examiner says that you will have requirements relating to technical knowledge, and you have to make sure that while attempting these requirements, you demonstrate your professional skills of communication, analysis and evaluation, judgment and skepticism, and commercial acumen. And I will give you additional 20% marks. So basically, whatever comment or whatever answer you will be writing in your AAA exam, it will be evaluated from two perspectives. One from technical knowledge perspective and other from professional skills perspective. All of this was discussed in detail in previous class. If anyone has missed out the orientation class, he can simply go and watch the recorded lecture again. Okay? This is the ease of the recorded lectures that you can watch them anytime. Then we had a discussion on paper structure that there are three questions, question 1, 2, and 3. Question number 1 is of 50 marks, which include 40 technical marks and 10 professional skill marks. You will only be answering requirements of 40 marks, which are the technical marks of auditing and accounting. 10 marks of professional skills will be given to a student if, while attempting those technical marks, he demonstrates his professional skills of good communication by giving headings, by using proper wordings, by listening to the examiner instructions properly, skills of analysis and evaluation, analyzing the rules in detail, evaluating the scenario in detail, showing his skill of judgment and skepticism, taking a judgment that, okay, here the management has done wrong treatment, showing skill of skepticism, questioning the data, challenging the data. The student should demonstrate a skill that he is not accepting the data in its existing form. Rather, he has the skill to challenge it, to question it, and skill of commercial acumen to show a skill that a student is also considering practical considerations, practical aspects of the audit firm. Then question number 2 and 3, 25 marks each with 20 marks on technical head and 5 marks each on professional skill head. Question number 1 will be majorly from audit planning. Question number 2 from during audit phase. And question number 3 from completion phase. But along with these three phases, you will also have requirements from other audit areas like other assurance engagements, due diligence, prospective financial information, social and environmental audit. You will also have areas from ethics. You will also have areas from quality control, going concern, money laundering, laws and regulation. So those other topics will also be examined along with these three phases of audit. Okay. Then we discuss the course outline. That your course outline starts with the first chapter of audit planning, which represents start of audit. And the most important requirement is to perform risk assessment of a client, in which you will be provided with a scenario of a client and you have to perform a risk assessment, and that can include evaluation of business risk, risk of material misstatement, or audit risk. The most important requirement of your exam, which will at least represent 20 to 25 marks, at least. Okay, so it will be a very important requirement, and we'll be starting discussion on it with this topic of business risk in our today's class. Then there will be theory areas of audit planning, like understanding the concept of materiality, audit strat, audit strategy, audit program, understanding of the client's business and environment. So the theory areas, so that you understand the basic concept of the audit planning also. Okay. Then the second chapter was matters to consider, audit procedures and audit evidences. Here we'll be revising all the accounting standards in detail. We'll be discussing different audit issues which audit firm can face during the audit activity. Like for example, a transaction relating to IS 37, transaction relating to IFRS 5, discontinued operation. So how an auditor approaches it, he need to have good understanding of the accounting standard, and he should have an ability to challenge the management and take judgments where management has done wrong treatment. And he should have an ability to conclude that where the opinion will get affected. So all of these issues will be discussed in this second chapter. Then audit procedures, audit evidences, all of this will be discussed. Then audit reports, contents of the audit report, critical appraisal of a provided audit report in exam. You will be provided an audit report and you will have to do appraisal of it, that okay, here the issues exist, or deciding implications of different issues on the audit report. Like if there is a misstatement or if there is a limitation on scope, then what will be the impact on audit report? So these all things were discussed in the previous class. But as I told in the previous class also, that since it's just a start of the course, so we cannot go in detail of each topic. We are just referring their names so that in the while we'll be discussing the course, you can identify that okay, this was the chapter we highlighted in the course outline. But obviously, we'll go in detail of each of the chapter when we'll be studying those. Then chapter of ethics and professional appointment, quality control and quality management, other audit areas like going concern, money laundering, laws and regulation. Okay. Then other assurance engagements, which include due diligence, prospective financial information. So all of this was discussed in the previous class. Okay. So we are just taking a quick review of it. And then in miscellaneous topics and current issues, because in advanced audit and assurance course, current issues are also examined. And these current issues will be referred in the technical articles also. So in my course, I make sure that we cover all of the articles. I don't say that, okay, go and read them. I include the video lectures. Almost you think more than 25 video lectures are included in the technical articles provided by the examiner. I discussed all of them in the class. And then we discussed the study approach, that when you are studying from me, you don't need anything extra. My topical lectures, my topical past paper practice, then homeworks and assignment, my own drafting approach, which reflects the examiner approach. I make it easy, I break it into parts. See, when you read the examiner answer, you are not able to understand that how you will draft like an examiner. So I've broken it into the approach that, okay, first do this, and then this. Like, for example, you are writing a procedure. So first write what the procedure is, then explain its purpose, that what will it verify. I've broken the things in step. If you're writing risk of material misstatement, first write the correct accounting treatment, then comment on the management, then heads affected, then materiality. So I've broken it into pieces. And then when I do past papers in the class, the students get more clarity on the drafting approach. Then at the end of the course, there are revision past paper sessions, mock exams, my personalized feedback, which takes my own time on each student. I check your answers, I give you feedback on it, which helps you to improve your drafting approach. And then the most important thing, my query support. I'm available always for my students. You can contact me on my WhatsApp number anytime for the query support. So all of these things were discussed in the first class, the introductory class. Okay, this will be our routine approach, that in every new class we'll be first discussing that what we discussed in the previous classes, so that you can have a quick recap. It takes like 5-10 minutes in every class, but a good recap will always be good when we'll be moving towards the topics also. Okay, so now let's start our today's class in detail, and we are moving towards our first chapter, and that is audit planning. I want you all to listen to me carefully because it is a very important chapter. Now, when you talk about this chapter of audit planning, in the examination, you can expect 25 to 30 marks from this chapter only. See, audit planning is examined in question number one. Now, in question number one, you can expect 25 to 30 marks from audit planning. Now, sir, question number one is of 50 marks. What will be the other marks? In question number one, 10 marks will be for professional skills. And then there will be rest marks on audit procedures, ethics, because examiner always keep other areas also along with your routine audit question. Like question number one is audit planning, 25 to 30 marks. Along with that, he will say that, okay, the risk you evaluated, tell me some planned audit procedures for it. 5 marks, 6 marks. Then you can have a requirement on ethics also. So audit planning will be normally examined in question number one. Okay. It will represent 25 to 30 marks, and it will be included in question number one. Okay. The question number one total is of 50 marks, but within that 25 to 30 marks will represent audit planning. See, now when we talk about audit planning, it is very important that you understand this phase of audit activity. Every audit activity must start with audit planning phase. It is a mandatory phase that every audit activity must start with planning. Just think about a situation that if auditor will not do planning and he will start the audit directly, how will he identify the areas on which he has to focus? How will he plan the deadline? How will he evaluate the materiality levels? So all of those essential things are planned in the audit planning phase. In the audit planning phase, first of all, auditor obtains the understanding of the client's business and environment. Just think about a practical audit activity. You are an auditor. You are going to a client for a first time. What you will do? Will you directly go and start doing procedures? You even don't know where to go. So what you will do is that first you will sit with the management and you will do some discussion. You will try to obtain understanding of their business. You will try to obtain understanding of their environment. You will try to obtain understanding of their internal controls, their system, their processes. So in audit planning, the first thing auditor will do is that he will try and obtain understanding that what the client is doing, what is his business, how he do the business, what are his systems, what are the processes, what are the internal controls, what is the hierarchy in the organization, who is responsible for what. First, you obtain an understanding of the client's business and his environment. Once you have obtained the understanding of the entity, the entire business environment, controls, process, applicable laws, reporting framework, once you have obtained this sufficient understanding, then you move towards second step, of performing risk assessment. See, what you need to understand is that auditor is not giving absolute assurance. Absolute assurance means 100% assurance. Auditor is not giving that absolute assurance. We are talking about external audit. The auditor is giving reasonable assurance. Now, reasonable assurance means that he's saying that financial statement as a whole gave a true and fair view. He's not saying that everything is correct. He's saying that as a whole, its view is true and fair. So he's just giving a reasonable assurance. So when you are giving reasonable assurance, you have to make sure that you cover all high risk areas. All the areas where there were risk of misstatement, you cover all of those areas. If you will focus on low risk areas, automatically your audit opinion on financial statement as a whole will get affected. When you are giving opinion on the financial statement as a whole, that its view is true and fair, that financial statement as a whole gives a true and fair view, I am giving reasonable assurance. So you have to make sure that you evaluate the high risk areas and you cover all of those high risk areas in your audit activity. So the auditor will perform risk assessment, auditor will calculate the materiality level, because you all know that auditor gives opinion on material balances also, that financial statement presents a true and fair view in all material aspects. So you have to calculate the materiality level. Okay. Then you have to plan the deadline. You have to plan your audit team, that who should be included in the audit team, what skills and expertise you require during your audit activity. So all of this need to be planned. Until and unless you will plan good, it is not possible to perform a good audit. You have to perform risk assessment of each account balance and transaction also. You have to highlight high risk balances. And then you will instruct your audit team that, okay, now during the audit activity, you have to cover these heads specifically. So audit planning is a mandatory phase of any audit activity, and it is mandatory for the auditor as per international standards on auditing to perform this audit planning. Now, sir, one quick question. Do we have to remember the references of ISA? Like audit planning is covered in ISA 300 series. Do we have to remember the references? The answer is no. You just need to understand the concept. There is no need to learn the references of ISA, their definition, and their references of definitions. Those are not required. Just understand the concept. Okay? This is I'm saying as per the examiner instruction, that you are just required to understand the concept and demonstrate in your answers. You are not required to learn the references of ISA number or their definition or their paragraph referencing. That is not required at AAA level. The focus of AAA exam is to evaluate the student's skill, that how he evaluate the exam scenario and how he demonstrate his auditing, accounting, and professional skills. Okay, now, so audit planning is a mandatory phase. Audit planning is a mandatory phase of audit activity, is a mandatory phase of audit activity, and auditors are required to plan, audit engagement first, are required to plan audit engagement first before performing any audit procedures. Okay. So before going for audit procedures and audit evidences, the during audit activity, you have to make sure that you plan the engagement first. Okay. So planning of the audit is very important, because until and unless you will plan the engagement, it is not possible that you target all the high risk areas. So audit planning is a mandatory phase of audit activity, and auditors are required to plan audit engagement first before performing any audit procedures. Now the question is that what an auditor will be doing in audit planning. Now during audit planning, auditors, auditor obtains understanding of client's business, understanding of client's business, of client's business, and its environment. Okay, the auditor obtains an understanding that, okay, what the client is doing, how he's operating the business, client's business and its environment, applicable reporting frameworks, that which IS and IFRS they are following, applicable reporting framework, internal controls and systems, internal controls and systems. Okay, so first of all, auditor performs understanding of the client's business and its environment. Now, one important thing, some students think that, okay, we have to write everything with the teacher or we have to learn everything. This is not like that. AAA exam is of very much different nature. You just need to understand the concept. In your examination, there will be no requirement which require you learning or rote learning. The exam will include scenarios, like audit planning scenario will be of 5 pages in which there will be detail of the client's business and you have to deal with the scenario. So just focus on understanding the concept, not writing anything or doing rote learning. Okay, you can just print out the documents and read it with my class. I write it during the class because students can have better clarity while understanding. They can look at every word and every phrase which I go on. Okay, now, so when you talk about the audit planning, what the auditor will do is that first of all, he will obtain the understanding about the business and its environment. Obviously, just think about an auditor. You are an auditor, you have went to a client. What you will do? First, you will sit with the client and you will do discussion that, okay, tell me about your business, what you are doing. Tell me about your environment. Tell me about the applicable laws, that what laws are applicable on you. Tell me about your reporting framework. Tell me about your internal controls, your hierarchy, your processes. Who is responsible for this? How you approve the sale invoice? How you approve the purchase invoice? How you purchase non-current assets? Do you have an internal auditor? So the auditor will obtain understanding of the client's business and its environment, applicable reporting framework, internal controls and system, laws and regulation. Okay. Then auditor will perform risk assessment, will perform risk assessment on audit client. Okay, he will perform risk assessment and he will identify that, okay, these are the high risk areas on audit client. To identify high risk areas, to identify high risk areas on which audit activity will be focused, on which audit activity will be focused. Okay, so it is very important that auditor performs the risk assessment and identify the high risk areas. Now, risk assessment includes business risk. Auditor will look at the business risk. Auditor will look at the risk of material misstatement. Auditor will look at the audit risk. That, okay, these are the high risk areas in which I am facing a risk that opinion may go wrong, or these are affecting the client's business. So I have to focus more on these areas. Okay, so the audit activity will be focused more on those areas. So auditor will perform a risk assessment on audit client. Now, risk assessment, we'll be discussing it in a lot of detail. Risk assessment includes evaluation of business risk, factors which are affecting the client's business. See, these business risks then create financial statement impact. Like the business risk can lead to going concern issues. For example, if there is a business risk which can affect the going concern status or the profitability or the cash flows, so it can lead to going concern issues. It can lead to impairment of the asset. It can lead to provisions for the legal case. It can lead to obsolete inventory if there is some technology change. So the business risk affects the financial statement, the risk of material misstatement. And obviously the auditor is concerned about the financial statement. So these things then affect the audit risk, which leads to impact on the auditor's ability to give the correct opinion. Okay. Other areas in audit planning include, what are the other areas which auditor do? In audit planning include materiality level, include planning of materiality level, because obviously materiality level needs to be planned. Otherwise, the entire audit activity will be focused on low material areas. Okay, we'll be focusing on immaterial areas. So planning of materiality level, planning of deadline, that how we have to make sure that our audit activity gets completed on time, planning of deadline. Similarly, auditor has to plan team, plan audit team, we have to make sure that we have proper composition of the team. Like some members who are experts of non-current asset, some who are expert for taxation, some who are expert of revenue. We have to make sure that our audit team represents a proper balance. And if we require any industry expert, like for example, if it is an agriculture industry, we need to have some expert who can value the plants. If it is an industry relating to oil exploration, we may be required to have some experts of oil sector who will be required to do the valuation of assets. So plan audit team, plan materiality level, planning of deadline, this all is done in the audit planning. Obviously, if the audit planning is not done properly, then it is not possible to do the entire audit with proper quality. Okay. Evaluation of ethical issues, if any ethical concerns exist, evaluation of ethical issues, if any ethical concerns exist, like any threats to independence or the code of ethics issues, you have to consider those also. Planning of principal audit procedures, that okay, in these areas we'll do these audit procedures specifically, of principal audit procedures. Okay. And other etc, many other things are planned in the audit planning phase. The reason being that the good the audit planning is, and automatically the entire audit will go in a better quality. If you are doing audit of consolidated financial statements, which you call as group audit, then you have to think about the auditors of the components, the auditors of the subsidiaries also, that okay, how they are doing work. So this all will be considered during the audit planning. And then this audit planning goes down from the entity level to account level. That okay, let's pick the receivable head. Let's plan the receivable head. Let's plan the accounts payable head. Let's plan the sales head. So we go to each of the head. We evaluate key accounting policies also. We evaluate key accounting estimates also. So audit planning is a detailed phase of audit activity. See, what you need to understand is that auditor has to spend good time in planning the engagement. First, he do planning at the entity level. Listen to me carefully. First, he do planning at the entity level understanding, entity level risk, entity level materiality, the whole entity level deadlines, the whole client level, the entity level. And then he goes into each of the head, that okay, these are the heads of the financial statement. Let's do planning for receivable now. So now we'll go inside the receivable. Who will do the audit of receivable? Like from the audit team, who will go there? What is the deadline for receivable? What is the materiality level which will be allocated to receivable head? Listen to me carefully. For the entire audit, for example, the materiality level is 100,000. So this 100,000 is not whole for the receivable. 100,000 is for the whole financial statement. So the team member who is going for the audit of receivable, he will be given certain portion of this materiality level. That okay, while doing audit of receivable, you can have a tolerance level up till $10,000. We have to make sure that the total of misstatements do not exceed the total materiality level of 100,000. So we break it for each head. Then we do risk assessment of receivable, that okay, these five balances are high risk. Here there is very big movement. So we instruct the team member who is designated to that area that okay, you have to look at these five areas specifically. We plan principal audit procedures, that okay, these procedures must be performed. So the audit planning is a very detailed phase. And one important thing, auditor has to make sure that he document this audit planning. Okay. In audit planning phase, in audit planning phase, two documents are prepared. In audit planning phase, two documents are prepared by auditor. Now, what are those two documents? Are prepared by auditor, which include are prepared by auditor. Number one, audit strategy. This is audit planning on overall level, on the client level. And the other document is called as audit program or audit plan. This is planning at each account level, at each head level. Like you have to make sure that you do planning at each account level. Now, what do you mean by at each account level? Planning for receivable, planning for sales, planning for expenses head. So you have to prepare plan for each head also. So if I just give you a review again, when you talk about audit planning, it is a mandatory phase and it is a very important phase of audit activity. Without good audit planning, it is not possible to perform a quality audit. It is decided. Without good audit planning, it is not possible to do a quality audit. Because in audit planning, you obtain understanding. Just think about a situation. Auditor is going for an audit and he don't know about the client's business. He don't know about the process. He don't know about the controls. So what you will do in the audit? What procedures you will perform? You haven't done risk assessment. You haven't planned procedures. You haven't planned the audit team. You have taken all the members who are expert of tax and you are doing audit of revenue head. Your team composition is wrong. You haven't planned the materiality level yet. So audit planning is very important. First, we have to plan at the client level, the entity level, and that all evaluation need to be included in a document called audit strategy. This is the plan on overall level, at the client level. And then you have to plan each of the head also. And that is called as audit program or audit plan. Okay. Further detailing will also be discussed in relation to audit strategy and audit program when we will be covering the theory of audit planning, the basic theory of audit planning. Okay. So we are just looking at the overall concept of audit planning now. That audit planning is a phase when an auditor obtains the overall understanding, he performs risk assessment, he plans deadline, he plans materiality level, okay? He obtains understanding of laws, regulation, he plans each of the head, he plans principal audit procedures. Everything is planned and documented. Now, once the planning is done, see, this is the reason why the audit starts 3 months before the year end. The auditor is there to audit your year end of 31st December, for example. So the audit activity starts on 1st October. Auditor starts his planning so that when he gets the financials final version, he just starts doing his work in detail. So he has to make sure that he planned the things properly so that then the later audit is done with quality. Okay. Now, one of the important thing which is done in audit planning is risk assessment. Okay, and this is very important requirement of our exam also. Risk assessment performed by the auditor. See, auditor has to make sure that he performs proper risk assessment of the client's business. What you need to understand is that audit activity is reasonable assurance, as I told earlier also. Auditor is not giving absolute assurance. If the auditor would be giving absolute assurance, he would have checked everything irrespective of the risk. Auditor is giving reasonable assurance. External audit is reasonable assurance. Now, when we just use the word audit, we are referring external audit. Internal audit, we will always refer that, okay, now we are talking about internal audit. Our AAA course is majorly about external audit activity. Okay. Internal audit issues are also slightly covered, but they will be covered in later part of the course. Now, when you talk about the external audit activity, okay, the external audit is a reasonable assurance engagement. The auditor is giving a reasonable assurance on the financial statement as a whole that it represents true and fair view in all material aspects. So how can you give opinion on as a whole when you have not checked all the things? So you perform the risk assessment, you evaluate the high risk areas, and then you make sure that your audit activity is focused on that high risk areas. Okay? External auditor, external auditor do not gives do not give absolute assurance absolute assurance on financial statements. See, if he would have been giving an absolute assurance, then there would be no need of risk assessment because in that case he will have to audit everything on financial statements. Rather, he has to give, rather, auditor gives reasonable assurance, gives reasonable assurance. Now, reasonable assurance means that you are not saying that everything is perfect. You are just giving an overall assurance. Rather, auditor gives reasonable assurance that financial statements presents true and fair view, true and fair view as a whole in all material aspects. Okay, for all material aspects, you look at the materiality level in all material aspects. But he is giving reasonable assurance. So now, when he is giving reasonable assurance, he has to make sure that he cover all of the high risk areas. Okay, now auditor has to perform risk assessment, has to perform risk assessment, has to perform risk assessment, and make sure that audit activity represents or covers that audit activity covers all high risk areas, not all the areas, all high risk areas, all high risk areas, so that reasonable assurance can be given. Okay, obviously external auditor do not have that much time, or he is not provided with that much fees that he can give absolute assurance. So he gives reasonable assurance. Now when you have to give reasonable assurance, you have to make sure that you cover all high risk areas, high risk areas which were evaluated as risky, so that reasonable assurance can be given. Are you getting it? In risk assessment, auditor evaluates in risk assessment, auditor evaluates three types of risk. Three types of risk. Now, what are these three types of risk? Number one, business risk. See, the risk to client's business can ultimately affect the financial statement. Business risk, risk of material misstatement. Because obviously auditor is concerned about the financial statement, so he has to think about risk of material misstatement in the financial statement. And the audit risk, factors which can lead to inappropriate audit opinion being expressed. Now, what do you mean by inappropriate audit opinion? For example, if there are any issues which auditor identifies that, okay, I will face these issues during the audit activity. So these are the audit risks which can affect his audit opinion. These can include first year of audit. We are doing first time audit of this client. So this is an audit risk. It creates an exposure that it can lead to inappropriate audit opinion. Now, all of these risks ultimately affect the audit risk. Business risk leads to risk of material misstatement. And then risk of material misstatement ultimately leads to audit risk, because auditor is giving opinion on the financial statement. So if the financial statement will be materially misstated, obviously auditor is also facing a risk in relation to it. So if you look at it, what we have discussed till now, audit planning, mandatory phase of audit activity and mandatory phase of your exam also. Always question number one, which is of 50 marks, will include at least 25 to 30 marks from audit planning. Auditor has to plan the engagement. He has to plan the engagement before doing any audit procedures. Until and unless audit planning is done with quality, the audit activity cannot be performed with good level of quality. You have to make sure that your plan is good, your plan is detailed, and it shouldn't be just in your mind. You have to prepare two documents to show evidence of it, and that includes audit strategy and audit program or plan. Okay, now risk assessment in your exam, it will at least represent 20 to 25 marks. So see, listen to me carefully. Audit planning, audit planning, 25 to 30 marks. In these 25 to 30 marks, risk assessment will represent 20 to 25 marks. What do you mean by this? That within audit planning, most important component is risk assessment. Like for example, from audit planning, you have 30 marks in question number one, 25 marks will be from risk assessment, and 5 marks from other areas. Like he can discuss detail about materiality level, he can discuss detail about audit strategy, he can discuss detail about audit program, he can discuss you detail that, okay, plan some audit procedures in response to your risk. Okay, so 5 marks for other area. But the major component of audit planning will be represented by risk assessment. Okay, so let me repeat it again. Audit planning, one of the big component of your exam, it will represent 25 to 30 marks at least. Now within this audit planning, 20 to 25 marks will be represented by risk assessment. Risk assessment is part of audit planning. These are not separate marks. Audit planning 30 marks. Within this 30, 25 marks for risk assessment and 5 marks for other areas. Sir, one important question. Will the examiner ask that, okay, define audit planning, define risk assessment? Will we have a question like this? The answer is no. The exam paper will be completely focused on scenario. You will have to evaluate the scenarios and you have to draft the risk and evaluate the risk from the scenario. Okay. Now, within the risk assessment, we are going towards the first risk, and that is called as business risk. Within the risk assessment, we are going towards first risk, and that is business risk, very important component of your exam. Within risk assessment, you can have a requirement relating to business risk. What is a business risk? See, business risk is any factor which can affect the entity's ability to achieve its objectives. Listen to me. Business risk is any factor which can affect the entity's ability to achieve its objectives. Now, what are the objectives of an entity? To generate profits, to maintain yourself as going concern, to maintain good cash flows. These are the objectives of the entity. Anything which can affect the entity's ability to achieve its objective. For example, if an entity is facing a legal case, it's a business risk because that will affect your profits. That can affect your cash flows. That can lead to going concern issue if your license get cancelled. So business risk, any factor which can affect the entities, the client, not the audit firms. We are evaluating risk of the client that can affect the client's ability to achieve its objective. In simple words, it can affect the entity's profits, cash flows, or going concern status. Now, one very important question. Sir, what is the interest of auditor in business risk? Auditor is there to audit the financial statement. Why is thinking about the client's business? See, the client's business will lead to multiple impacts on the financial statement because financial statement reflects the client's business. Use your mind. If there will be business issues, it will lead to impairment issues in the financial statement. Value in use of your assets will decline. If there will be business issues, it will lead to legal cases and it will require provisioning in your financial statement. If there will be business issues, it will affect the going concern disclosure in your financial statement. So obviously, business risk is an important component. Okay. So business risk, any factor, which can affect client's ability, to achieve its business objectives. Now, what are these business objectives? Profitability, cash flow, and going concern. Okay, anything which can affect the entity's ability to achieve its business objectives. Okay, in simple words, any factor which can affect clients profitability, cash flow, or going concern status. Okay, so it will be considered as a business risk or going concern status. Now, obviously, in order to evaluate the business risk, you need to obtain good understanding of the client's business. See, the auditor goes and then he sits with the client and he discusses with the business that, okay, tell me about your business. What is the situation going on? How the sale is going on? Who are the key competitors? Give me some industry data. Obviously, auditor not only relies on the client's information, he also performs his own research also. So he has to evaluate the client's business. Now, in order to evaluate in order to evaluate business risk, in order to evaluate business risk faced faced by client, auditor has to obtain, an understanding, of client's business and its environment. Now, how do you obtain this understanding? He holds discussions with the client, management, he evaluates the industry data, and he obtains the understanding of the client's business and its environment. When the auditor obtains that understanding, he is in a better position to evaluate these business risks. The factors which can affect the sales, the profits, the cash flows, the going concern status. Let's take examples of it. For example, there is a new technology. It's a business risk because that can affect your profitability. For example, if there is a new law, it's a business risk because that new law can affect your ongoing businesses. For example, government introduces a new law which makes your activity illegal. Or if there is a risk relating to legal case, that's a business risk. Or if there is a risk that you have sold some defective products, so that can lead to the reputational loss, and the defective products can ultimately lead to legal cases also. Or think about a business risk relating to exchange rate movement. If you are dependent on foreign currency transactions, or a business risk can be related to a competitor, or a business risk can be related to too much dependency on one supplier, or too much dependency on a single customer. So any factor which can ultimately lead to bad impact on your profits, cash flows, or your going concern status, that will be considered as business risk. So, the audit planning starts with understanding of the client's business and its environment. And when you understand the business, you understand the environment, you hold discussions with the management. And along with these discussions, the auditor obviously performs his own research also. Because you all know that the discussion of the management is not a very good evidence. Okay? Because management may lie also. So auditor performs his own research also. So once you have done the understanding, then you start evaluating the business risk. Now the question is that why business risk is important for an auditor? Just think about it. Business risk is important. Business risk evaluation is important for auditor, is important for auditor, as business risk may lead to impact on financial statements. Like what impacts? Just use your mind. May lead to impact on financial statements. Okay. Now, what can be those impacts? It can lead to impairment of assets. For example, if there is a business risk which can lead to fall of profits or fall in sales, so it can lead to impairment of assets because value in use of your assets will fall. It can lead to obsolete inventory. For example, the technology changes, so there will be obsolete inventory, and you may have to do the adjustment of lower of cost or NRV. It can lead to provisions. Maybe you are required to record legal case provisions, or maybe it can lead to going concern issues or impact the going concern disclosure of the company. So there can be multiple impacts due to the business risk. So it is important for the auditor to evaluate these business risks, as then they can lead to impact on the financial statements. Okay. Now see, within the business risk also, auditor has to make sure that he look at the significant business risk. See, there can be business risks which are very small risk. Auditors have to keep focus on significant business risk more. Okay. Auditor more focus, has to give more focus to significant business risk. See, there can be business risks which have very low spectrum or low significance. So you have to look at significant business risk whose spectrum, whose intensity is very high, has to give more focus to significant business risk. See, obviously, auditor cannot focus on all of the risk. Auditor has to make sure that he covers the significant ones. Okay, so these were the examples of the risk, the impact the risk can have on the financial statement. Now, if we list down some of the example business risk, like let's discuss some example business risk which can be faced by an entity. Example business risks. Okay, I want you all to think on your own. Let's think what example business risk can arise. For example, if there is a technology change. See, if I talk about my teaching industry, 10 years back, the teaching used to be in physical classes. We used to invest a lot in our physical institutes, the on campus activity, the campus activity. And then the technology changed. And now the world is of online classes. So this was a business risk for those entities who didn't adapt themselves with the technology. Like many of the institutes I know, they have went out of the business because they didn't have the technological adaptation. They didn't keep them updated. They thought, no, the world will not go online. So now they are obsolete. The technology change. After COVID, many things have changed. So technology change is a very big business risk. Change in laws and regulation. When laws and regulation change, automatically that affects the business. Because when laws and regulation change, maybe the activity which you are doing may become illegal. So changes in laws and regulation. Or a new competitor is a very big business risk. Like if I talk about our industry, due to online, we have become global. We are serving in 80 plus countries. We have become a business risk for many institutions which are operating in your country. Like we are giving such a quality that those institutes and those organizations consider us as a business risk, that someone from some other country is coming and capturing our market. So yes, new competitor. And even in any industry, new competitor can be a business risk, because when a new competitor comes, you can have very good strategies. So new competitor is a business risk. Price war in the market. Like, for example, if the price war starts between the competitors, that can lead to business risk. Those businesses who have high costs will simply go out of the business. Okay. Then, similarly, cancellation of license. For example, the regulator cancels your license or you do some non compliance. So, that will be a business risk. Some legal case being filed against you. So, that can be a business risk. Any reputational issue, like any defected good is being sold, so that can be a business risk. Or sometimes you face some campaigning against yourself on the social media, so that can also be a reputational issue, and obviously that can affect the business of an entity. So think about a bigger scale. All of these businesses face risk. For example, even a company like Samsung once sold some mobile phones which had certain defects that they used to explode, like it happens many years ago. So that was a big reputational issue. People will start to lose trust. Or, for example, if there is an airline which is having multiple accidents, so people will lose trust on it. And as a result, it will lose reputation, its sales will decline, and its business will get affected. So what else business risk can be exist? Like foreign currency transactions. So adverse movement in exchange rate can be a business risk. If the exchange rate moves adversely, foreign currency transactions, okay, it can lead to a business risk if there is adverse movement in exchange rate. Okay, adverse movement in exchange rate can be a big business risk. Movement in exchange rate. Okay, so that can be a business risk. Think about other businesses which you can face. Dependency on one supplier. So if you are too much dependent on one supplier, it's a business risk. Because, for example, if that supplier goes out of the business, then you will also suffer. Or if that supplier starts to blackmail you, if he tries to introduce his own terms, and that can affect your business. Dependency on one customer is also a very big business risk, because if you are too much dependent on one customer and if you lose it, your business will suffer a lot. So that is a business risk. Think about other businesses. What type of risk a business can face? If there is any technology change, or if there is any fashion change, or any climate change, if there is any natural disaster. We have such questions in the past paper when the client's business has suffered from a natural disaster. So that can be a business risk. Any change in fashion or trend, economic recession. So these all can be business risks which can affect your business, like natural disaster or some economic changes like economic recession or like any introduction of any taxes. So these all can be the business risk which can affect your business. Okay. So if I talk about business risk, one important thing, please make sure that you're in examination. You will never face a requirement to explain business risk. Okay. You just need to understand its concept. And in the examination, you will just be required to evaluate the client scenario. Okay, you will just be required to evaluate the client scenario. And while evaluating the client scenario, you will have to evaluate the risk given in it. Okay, so what is business risk? Any factor which can affect the profits, cash flows, or going concern status. Okay, in the exam, you will be provided with a client scenario and you have to evaluate the business risk from it. But while evaluating business risk, it is very important that you obtain understanding of the client's business and its environment. Obviously, in the exam question, within the exhibits means the attachments of the question, you will be provided with those discussion. So you have to read those discussions and then you have to evaluate the business risk given in it. Are you getting it? Now let's move towards one important thing, the exam focus discussion. That how business risk can come in your examination and how you have to make sure that you attempt it in a good manner. How much business risk can come, how you have to draft each of the business risk. So now let's look at the exam focus discussion, that how you have to deal with it in your examination. Okay, let's look at it. Now, in the examination, business risk requirement can come for like 10 to 15 marks. Okay. Now, risk assessment total holds 20 to 25 marks. If the business risk is coming in the exam, business risk requirement will be of 10 to 15 marks. And along with that, the examiner will ask you other risk also, like in requirement B. He can ask you risk of material misstatement or audit risk requirement also, which can complete 25 marks allocated to risk assessment. Okay, so business risk, just a second. Business risk requirement, business risk requirement, business risk requirement can come in exam for 10 to 15 marks. Okay. Like what happened normally is that whenever the examiner is giving you business risk, he asks risk of material misstatement along with it. Or he can ask audit risk also. Okay. The total marks for risk assessment topic are at least 20 to 25 marks. So if the business risk is coming, it will represent 10 to 15 marks and rest of the marks will be covered by risk of material misstatement or audit risk. Or this is also possible that business risk do not come at all and all of the marks are allocated to risk of material misstatement or audit risk only. Okay. So what happens in the exam, either the question type will be that in requirement A, you will have business risk for 10 to 15 marks. And then in requirement B, he will ask you risk of material misstatement or audit risk for remaining marks, which brings the total to 25 marks. Or what can happen is that business risks do not come in the exam and the total 20 to 25 marks of risk assessment are examined from risk of material misstatement or audit risk. Okay. So business risk is not mandatory in the exam, but the risk assessment overall is mandatory. If the business risk will come, it will represent 10 to 15 marks from it. Okay. Now, in the examination, the examiner says that you will be provided with complete detail about the client's business and its environment. You have to evaluate the risk from the information provided. The examiner do not expect that you should have some background knowledge of the client's industry. For example, if the question is of agricultural industry, the examiner do not expect that you should have. Now, when we talk about our advanced audit and assurance exam, our requirement on business risk can be of 8 marks to 15 marks. The total marks allocation for risk assessment topic are 20 to 25 marks. Now, business risk can represent 8 to 15 marks within it. Remaining marks will be allocated to another requirement which can be of risk of material misstatement or audit risk. Or this can also happen in the exam that business risk is not examined at all, and entire 20 to 25 marks of risk assessment are on a requirement of risk of material misstatement or audit risk. But if the business risk is being examined, it will be of a requirement of 8 to 15 marks. Okay? If business risk topic is examined. Now, with the word if, I'm indicating that this topic is not mandatory to be examined. Risk assessment head is mandatory. Now, within that head, he can examine business risk, or he can include a requirement on risk of material misstatement or audit risk also. Or he can give a combination of two risk also, like one requirement on business risk and other on risk of material misstatement or other on audit risk. So total 20 to 25 marks are for risk assessment, within which the examiner can do different type of allocation. So if business risk topic will be examined, it will be a requirement, of 8 to 15 marks. It will be a requirement of 8 to 15 marks. Now, sir, what about the remaining marks of risk assessment topic? They will be included in another requirement, which will be either on risk of material misstatement or audit risk. Remaining marks of risk assessment topic will then be either on risk of material misstatement or audit risk. Misstatement or audit risk in another requirement. Okay, so you can have a combination of risk assessment also. Now, when you talk about your triple exam, if we further explore our exam focused discussion, see, you will never be asked for rote learning or to use your learning topics. You will always be provided with a scenario in your exam, and you will have to evaluate the scenario. Like, you will have information relating to a client, and you have to evaluate business risk from that information. The examiner will never ask you a requirement like explain business risk. Rather, at AAA level, you will have a complete scenario of like 4 or 5 pages, and you have to evaluate the business risk from that scenario, which are relevant to client's information. Okay, so students will be provided with a scenario, relating to a client, and business risk need to be evaluated from it. Okay, business risk need to be evaluated from it. Now, some more important discussion. See, when you talk about evaluation of business risk, you need understanding of the client's business and its environment. So all the relevant information will be given in the question. Students will only be required to evaluate the question's scenario in detail. No background knowledge. Like, for example, if any student says that, okay, sir, if I do some research on agricultural sector or on oil exploration sector or any particular sector which may come in the exam, so the first thing is that you cannot predict that which sector will be included in your exam. And you are not required to use your background knowledge or your past studies. The examiner only says that you have to evaluate the scenario in detail. See, when you talk about risk of material misstatement and audit risk, there the examiner expects that students should have background knowledge of accounting standards and the background knowledge of the auditing. But in business risk, the examiner only says that read the question scenario well and evaluate the risk from the information given in the scenario. Okay? So all relevant information about client's business and its environment will be available in exam scenario and students have to use or have to evaluate that only. Okay? No background information is required. No background information from past studies is required. Okay, so this is very important because sometimes in business risk the students get confused that how will we have knowledge relating to the industry. So everything will be given in the scenario. No background information from past studies is required. Okay, now moving forward in the exam focused discussion. See, students will be required to discuss significant business risk only, not all business risk. You have to pick up the significant business risk from the scenario. What do you mean by significant business risk? Which are relevant to the client situation. Just giving you an example. For example, you are provided with a balance sheet, and in non current liabilities, a loan balance is given and there is no further detail in relation to the loan balance. So this means that here loan balances were not a significant risk. If you just start writing a risk that okay, the company may go bankrupt, so the examiner will say that student is not reading the scenario well. What the examiner expects is that you have to look at significant issues, the issues for which there is detailed discussion in the question. So you have to pick the risk from that. Like, for example, only a revenue number is given, and you start writing a risk that revenue may decline. So, yes, that is a risk, but that is not a significant risk. So, you will only be marked for writing significant risk. And this also shows your professional skill of making a judgment and making a decision that, okay, this risk is a significant risk. Okay. So, students will be required to evaluate significant business risks only. Will be required to evaluate significant business risks only. Now, what are significant business risks? Think about it. Significant business risks are those risks for which sufficient knowledge is given in the scenario. You don't have to refer all risks, you would only have to refer the significant ones. Okay? So, what is a significant business risk? Let's talk on this. See, it is very important that you understand this exam focused discussion. Your understanding of the concept is important, but the exam focus approach is also very important. As we move forward, I will also discuss the drafting approach and we'll also draft few points in our today's class also. And in the later classes, we'll be doing the past papers also. But this all discussion is very important, so listen to it with patience and concentration. Significant business risks are those business risks which are important in client's perspective or in client's scenario. Okay, if I talk about exam question, business risk sufficient for which sufficient detail is given in question, which is detailed by the examiner, for which sufficient detail is given in question. So you have to evaluate those ones only. Like, for example, if a student starts to discuss basic risk, that company may go bankrupt, revenue may decline. So these were not the risks which were significant in that scenario. Maybe they are significant if the examiner is giving detail in relation to it. For example, if the revenue in the question has declined significantly, then you can discuss it. But if the revenue is only moving by 1% and you develop a risk that revenue may decline and company may go bankrupt, then this means that you don't have a skill of taking a judgment to determine that which risk is significant. Okay. So you have to refer important risk in the client scenario, which are important in the perspective of the client. Business risk for which sufficient detail is given in question. Okay. Don't refer all risk. Don't refer all risk. Only evaluate significant risk. Okay. Which are significant in the perspective of client. And think practically also that auditor only evaluates the significant one. Auditor also cannot cover all of the business risk. So when we talk about the business risk topic, you can have a requirement which can be of 8 marks to 15 marks. Remaining marks of the topic of risk assessment will be covered in other requirements, which will either be on risk of material misstatement or audit risk. Okay. Students will be provided with a scenario relating to a client, and business risk need to be evaluated from it. All relevant information about client's business and its environment will be available. So no background knowledge or no background study, just look at the question scenario. Okay? And students will have to evaluate significant business risk only, the important ones in the client scenario. Okay? Business risk for which sufficient detail is given in the question, you have to evaluate those ones. Don't refer all risk, only evaluate the significant ones. So how will we identify that which risk is significant? When we will be doing the past paper practice, I'll be giving you guidance that see, for this risk, sufficient detail is given. The examiner has talked on it. It's a 5-page scenario. So examiner will be discussing different issues. So those on which there is discussion, those are the significant ones in the perspective of the client. Don't refer the small one like those risks for which no detail is given. Like if just one liner is given, that company is also doing business internationally. So don't get in that risk. Rather find those risks for which sufficient 2-3 line detail is given so that you can determine that, okay, this risk was significant in the perspective of the client and in the perspective of the examiner. Okay. Now coming towards the drafting approach, the marking. Okay. Every business risk drafted by student, every business risk written by student or drafted by student, written by student will be evaluated or will be marked from two perspectives. See, I told you this in orientation class also. Will be marked from two perspectives. Now, what are those two perspectives? See, number one is technical marks perspective. Okay, first you will get technical marks on your risk, and then you will get professional skill marks on your risk. What do you mean by this? Throughout your advanced audit and assurance level exam, whatever drafting, whatever writing you do in your answer, you will be evaluated, marked on it from two perspectives. One is technical marks, the auditing and accounting knowledge, and one is professional skill marks, how well you have communicated your answer, how well you have evaluated the scenario, how well you have taken the judgments in your risk, like where you determine that, okay, this risk is a greater risk, this risk is a significant risk. So examiner will read your business risk, and first he will think it from the technical perspective, and then he will read it again, and then he will be evaluating it from professional skill perspective. Okay, listen to me. See, this whole discussion is very important. You need to understand that how you have to deal with an exam. Okay, in technical marks perspective, in technical marks perspective, every business risk, every business risk carry 2 marks. Every business risk carry 2 marks. Okay, whatever business risk you are writing, it carries 2 marks. But these 2 marks are maximum which you can gain in that head. For example, if a business risk requirement is of 8 marks, so those 8 marks are technical marks. Now within that, every business risk will carry 2 marks maximum. Listen to me very carefully. This is very important discussion. We are currently talking on technical marks perspective, that your risk should be well evaluated from the auditing perspective. Here, what you have to make sure is that you do identification of the risk. You have done correct identification of risk. Like when you are writing a risk, for example, in relation to high gearing. So you identify a risk that due to high gearing, a risk exists that interest cost will be very high, or there is a risk that company may not be able to repay the loan on time. You first identify the risk, but while doing identification of the risk, make sure that you don't repeat the question too much. Like what students do is that they start writing this, that company's loan balance is this, and it is a very high gearing. Don't repeat the data. The examiner only knows the data. So you just need to comment on it. Pick up the risk that, okay, here the risk is high interest cost. Here the risk is inability to repay it on time. Or for example, if company is doing foreign purchases, so the risk is adverse exchange rate movement. So pick up the risk, identify the risk. Obviously, you have to refer the question scenario, but refer it very less. The examiner already know the scenario. Don't repeat too much. Like what the student do is that they, in first two lines they repeat the scenario. So you are wasting your time. Okay. So directly jump to the risk. First identify the risk, then comment on impact of the risk. That what will happen if that risk materializes? The profits will fall, the cash flow will fall, going concern issue will arise. What will happen? Talk on impact of the risk. And then comment on scale. Scale means intensity of the risk, like why that risk is becoming a significant risk, like any factor which is increasing its intensity. Just take an example. For example, if company is doing foreign purchases, so identification of risk is adverse exchange rate movement. Impact of the risk: if the exchange rate will move adversely, the cost of the company will increase, and when cost of the company will increase, it will affect our profit margins. Then scale or intensity of the risk: company is not using any forward exchange contract. So when company is not using any forward exchange contract, it is increasing its exposure. Any hedging technique the company is not using, so that will increase its exposure. Read the scenario, a 5-page scenario you will be having in your exam. Read that scenario and find any comment which is increasing its intensity. Or, for example, you can say that the profit margins are already declining this year. So that increases the intensity of the risk that if the exchange rate will move adversely, the margins will decline further. So develop some comment which increases the significance of that risk. Obviously, when we'll be dealing with past paper questions, you will get more clarity on this drafting approach. So, in technical marks perspective, every business risk carries 2 marks maximum. And in that, you have to do identification, you have to write impact of the risk, and you have to comment on scale or intensity of the risk. Okay. Now, if you do any calculation, just listen to me on the marking approach and then I'll write examples also. But this marking and drafting approach is very important. So you have to listen to it very carefully with patience. If any calculation is done, if any calculation is done during risk evaluation, is done during risk evaluation, then additional 0.5 mark will be allotted or will be given for each calculation. Now, what do you mean by calculation? Calculation means like you calculated some trend, you calculated some percentage change, you calculated some ratio like gearing, profit margin. If you calculated something, you are not required to show the formula. You just show the final number that, okay, gearing is 30%, gearing is 70%. If any calculation is done during risk evaluation, then additional zero point 0.5 mark will be given for each calculation. But these marks are maximum 3 marks for calculation. Now, what do you mean by this? Like for each calculation, you get zero point 0.5 mark each. So maximum calculations for which you will be marked, these will be 6 calculations. So for each ratio, you get 0.5, 0.5, 0.5, 0.5. So up till 6 calculations, you get zero point 0.5 mark each. So maximum 3 marks can be gained. See, 3 marks total and zero point 0.5 for each calculation. So there can be 6 calculations which will be marked. Like what I'm trying to say is, just listen to me. For example, you are writing a risk on exchange rate movement or high gearing, and there you calculate change in profits, you calculate profit margin, or you calculate the gearing percentage, or you calculate increase or decrease in sales. Any calculation, any trend, any ratio, if you calculate during your commentary, like for example, if you are talking on high gearing and you calculate the gearing percentage, for that percentage calculation, you will get zero point 0.5 mark each. Okay. And these calculation marks can go up till maximum 3 marks in the question. The examiner has kept a breaker for this because otherwise the students will only gain marks through the calculation. So the examiner is saying that I am more interested in your evaluations. So you can get maximum 3 marks for calculations, but after that you can do calculation, but then you will be not marked for the calculations. I want each business risk to be well evaluated. Let me give you an example. For example, if there is an 8 marks requirement on business risk. So with 2 marks approach, you have to write 4 risks. But what you can do is that you write 3 risks, and within each of the risk, you do some calculations also, like profit margin, gearing, but where relevant. Don't do excessive. You have to use it in your evaluation. So if you do calculations and you do 4 calculations, so you can get point 0.5, point 0.5, point 0.5, 2 marks for the calculation. So your total 8 marks will be completed for that question. Okay. So for every business risk you are drafting, you are writing, the student will be marked from two perspectives. Currently, we have talked on technical marks. Technical marks, your quality business risk which you are drafting. Now, what do you mean by professional skill marks? See, when I talk about professional skill marks, it is not a separate requirement. In professional skill marks, the examiner says that whatever business risk you are writing, you have to demonstrate your professional skills, like skill of communication, give headings, use good wordings, okay, follow my instructions. That sometimes the examiner says that, okay, ignore business risk of this area, so you have to ignore it. Read his instructions carefully. For analysis and evaluation, how well you refer to the scenario, how well you analyze the client situation. Judgment and skepticism, your judgment to identify the significant risk. Commercial acumen. Obviously, the business risk is all about commercial acumen because it is about the commercial perspective of the client's business. Okay. So, for each business risk drafted, additional professional skill marks, additional professional skill marks will also be given, if students demonstrate professional skills of, what are those professional skills? Professional skills of communication. Now, what do you mean by communication? Give headings, use proper wordings, follow the instructions of the examiner, read the question requirements carefully. Professional skills of communication, analysis and evaluation, how well you related to the scenario. Like what happened is that students draft business risk by looking at only one portion of the question. This is wrong. You should show an ability that you read the entire question and you are referring all of the information of the scenario. Judgment and skepticism. Okay, now what do you mean by judgment and skepticism? Your ability to determine critical risk. Skepticism, your ability to challenge the management, that okay, here you are facing the risk, this thing is declining, you need to look at this risk. And skill of commercial acumen. See, obviously these professional skills will be taught when we'll be doing the past paper questions, because when we'll be doing the past paper questions, I'll be guiding, see, here you are demonstrating your professional skill. But for professional skill, there is one important thing. These are not given for each risk separately. The examiner evaluates it on your whole question. Like technical marks are 2 marks for each risk, but professional skill marks are not allocated to each risk. They are evaluated on your overall answer. Okay? Professional skill marks, professional skill marks are evaluated on whole question. Now, what do you mean by are evaluated on whole question? The examiner reviews your whole question and then he determines that whether your answer is satisfying the professional skills or not. It is not on each of the risk you are writing. Are evaluated on whole question. They are not divided on each risk. Okay, like I cannot clearly say that for each risk you will get this much professional skill mark. They are not divided on each risk. For technical marks, I have given you clear guidance that for each of the technical marks in business risk head, you will get 2 marks each. See, technical marks means your auditing knowledge. Okay, now in business risk, obviously it's not accounting knowledge. This is your auditing knowledge. like how well you are evaluating the business risk. Okay. When you say professional marks, it is your professional skill of communication, analysis and evaluation, judgment and skepticism, and commercial acumen. See, professional skills is not a separate requirement. You are answering same requirement of business risk. You just need to make sure that you demonstrate your professional skill of communication, analysis and evaluation, judgment and skepticism, and commercial acumen. Okay. Now, in technical marks said, every business risk you write, you will get 2 marks each. These are maximum marks. Obviously, a very good risk which you have written. Okay. Identification of risk, impact of the risk, and comment on scale or intensity of the risk. Factors which are increasing the intensity, the scale of that risk. That, okay, the gearing is very high and the intensity of the risk is very high because company is already facing low profits. The profits are already declining. So it will affect the company's ability to pay the interest cost. So comment on the scale, the intensity of the risk. Obviously, when we will be dealing with the exam scenario, you will understand it in a better manner. Now, if you do any calculation during evaluation of risk, like for example, you calculate percentage change in sales, or you calculate gearing ratio or profit margin ratio, for each calculation you get up till 0.5 mark each. Maximum are 3 marks, which means that you can do up till 6 calculations in your answer. You are not required to show formula or working like that. You just give the final number and the examiner circles it and give you 0.5 mark additional. But that need to be used in your evaluation. Don't do like this that only you listed the ratios and you say that, okay, give me 3 marks at least. This is not like that. You need to use it in your answer. Okay. But there is a breaker for the total calculations you will do. And that maximum limit is 3 marks. Because the examiner wants the students to write down the risk also. Otherwise, they'll only gain the marks through the calculations. And when you talk about professional skill marks, for every business risk, you will get additional professional skill marks in which you have to demonstrate your professional skill of communication, of analysis and evaluation, of judgment and skepticism, and commercial acumen. Are you getting it? Now, one important thing. In exam, the examiner will make you an audit manager. In exam, students will be made an audit manager, who is evaluating client scenario. An audit manager who is evaluating client scenario. Now, what do you mean by this? Who is evaluating client scenario. Now, by this, the examiner is saying that I want answers and evaluation which is of a level of a manager. So I need impressive answers. Students will be expected, to evaluate, scenario at audit manager level. So very basic points will not be acceptable. So you have to write like an audit manager will be have to evaluate scenario at audit manager level. Answer need to be impressive. Now, many of the students who are doing exam at this level are either not doing any job or they are at junior level. So how they will learn to write these impressive answer? So for that, the only solution is practice and tutor feedback. You will write answers and send me for marking and feedback. I will check you and I'll tell you that, okay, here you need to improve. Here you have to make your answer impressive. Okay. So answer need to be impressive and of manager level, not of a junior level or a supervisor level. So you will be an audit manager who will be answering to an audit partner. So you have to make sure that when you draft your answers are impressive. Okay. So I hope that you are understanding the approach. See, it is very important that along with the topic, you understand the exam drafting approach, because then only you will be able to deal with the exam scenario. Okay. So if you look at my approach, you know that I teach in very much detail. We first discuss the concept of audit planning. Then we discuss the concept of business risk. Now we are having discussion on exam focus thing. We discuss that how you have to draft a risk. like how you have to write a business risk. While writing a business risk, you identify first, you comment on its impact, and then you give an evaluative comment. For professional skill, you have to make sure your communication is good. You analyze the scenario well. You take judgments that, okay, this risk is significant. You can take a judgment that, okay, here a risk exists. Your ability to challenge the data. Like, okay, you can raise question that, okay, here the risk exists. That is being ignored. Okay. You read the complete scenario. You evaluate it well and commercial acumen. When you write business risk, you automatically get marks of commercial acumen because business risk is all about the commercial perspective of the entity. Okay. Obviously, when we'll be dealing with the exam questions, I'll be guiding you that how you have to write it. Don't get don't rush that, oh sir, I feel difficult, that how will I gain the professional skill marks? Believe me, it is very easy. Practice which we'll go through, we'll do 5 complete questions on business risk, then I'll give you 3 questions as a homework. I'll give you personalized feedback on that, my own personalized feedback for each of the student, and then you will be able to identify how you have to write professionally, how you have to gain technical marks and the professional skill marks. Okay, now let's draft some example business risk, and then we'll look at the technical article, and then we'll move forward. So let's draft some example business risk. See, obviously in the examination, you will have a complete scenario available. But here we are just assuming some situation so that you can have an idea that how you have to draft a business risk. Okay. So these are just examples. Don't rush or get frustrated that how will I do. These are just example situation. I'm writing it with you people so that you can have an idea that how you have to draft a risk. For example, if we take a situation where company has done non-compliance with any law, okay? Let's think about a situation when a situation is non-compliance of regulation. Like company has done any non-compliance with any regulation. How will you write a risk? Okay, let's think about it. First step, remember, we first identify the risk. We have to make sure that we do identification of the risk. So obviously there will be a scenario in which complete detail is given about it. But let's think, if a company has done some non-compliance of regulation, what business risk existed? The business risk is of imposition of penalty. The business risk is of cancellation of license if the regulator finds about that non-compliance. Okay. So company X may face may face a penalty may face a penalty from regulator if if non-compliance gets known to regulator. See, this is the risk. We first identified it. First, you have to identify the risk. See, don't repeat the question. Like what students do is that they first write 2 lines about that non-compliance. That company did this and this is a non-compliance. Don't do this. The examiner already know the scenario. He already know the scenario. He already has the question. So directly go for identification of the risk. The risk is penalty. Company X may face a penalty from regulator if non-compliance gets known to regulator. So this is the identification. First, identify the risk. Then let's talk on its impact. What will happen if we face a penalty? Just think about it. If we face a penalty, we'll face cash flow issues. If we face a penalty, our profits will decline. Okay. Due to penalty being imposed, due to penalty being imposed, company X will face a cash flow burden, and its profits will also decline. Okay, so now this is the impact that this will happen if you face the penalty. Okay, first you identify the risk, then you comment on impact of the risk, that what will happen. Like if we have done the non-compliance and we face the penalty, what will happen? Our cash flows will decline, our profits will face a burden. This is the impact. Now think about the scale of the risk. Comment on its intensity. See, now for that you need to read the scenario. Let's assume certain situations. For example, if already the cash balances are declining, So you will write that already the cash balances of the company are declining, which increases the intensity of the risk. The company will not be able to pay the penalty if it gets imposed. Or the intensity of the risk, you can refer that, okay, the profits are already declining. So when the profits are already declining, the further penalty impact will lead to adverse movement in profits by a greater extent. Or in the scale of the risk, you can say that if the company has not reported it to the regulator itself, and the regulator discovers it on its own, then it will impose greater penalty. So evaluate, look at some comment which increases the intensity, the scale of the risk. Okay. Now, as company has not reported, non-compliance, to regulator itself, to regulator itself, it may face it may face greater amount penalty it may face greater amount penalty if regulator finds on its own, or maybe the regulator will cancel your license. Okay, so this is a comment which increases the intensity of the risk. See, this is my teaching technique, that I make the things easy. I don't say to my students, go and read the examiner answer and understand the drafting on your own. When you are studying from me, and this is the reason why so many students have nationwide position, and this is the reason I give good time to my students. For every student, I check their answer, I give them guidance that, see, you are doing error in identification, you are doing error in writing the impact, you are not writing the scale of the risk in properly. Scale of the risk, the intensity of the risk. Read the scenario carefully, and you'll find a comment on the intensity of the risk. Now, that can be, for example, the company is hiding it, so the intensity of the risk increases, or the profits are already declining, or the cash flow position is already adverse. So that will increase the intensity, the scale of the risk. Okay. So if you just look at the writing approach, it is just following the approach and reading the scenario carefully. First, you identify the risk that we may face a penalty. Then you wrote impact, that due to penalty, our profits or cash flows will feel burdened. And then you commented on scale of the risk. You evaluated the risk that non-compliance will result in greater penalty if we are hiding it, or we may face cancellation of the license. See, when you hide from the regulator, obviously you are annoying the regulator. You are increasing its intensity. Okay. Let's draft one more risk. Let's think about one more assumed situation. For example, if a company has high gearing, so how will you draft a business risk? Okay. For example, if company has high gearing, how will you draft a business risk in that situation? Okay. So if a company has high gearing, the risk will be that fixed interest cost will be very high, and the loan installments, the company may not be able to repay them when they get due. Okay. So let's draft a risk, but first we have to identify it. Due to high gearing, due to high gearing, company X, we are just assuming the name, faces a risk, faces a risk of inability to pay interest cost, to pay interest cost or loan installments on time when they fall due, or loan installments on time when they fall due. Okay. So the risk, what is the risk? Think about it. The risk is inability to pay the interest cost. The risk is inability to pay loan installment on time when it gets due. Identify the risk. Now let's think about its impact. What will happen if you don't pay the loan installment on time? Okay. Now what some students do is that they directly write the company will go bankrupt. No, no, no. Don't think about extreme situations. When you don't pay the loan installment on time, or when you don't pay the interest cost on time, the bank will impose covenants, it will enforce the mortgages, it will take control of your assets. Okay. If they take control of our assets, we don't go bankrupt. We give that asset and we can take another asset on rent, or we can sell something and repay the loan. Don't talk about extreme situations directly. Okay. Think practically. This is your commercial acumen. Okay. Bank may impose Bank may enforce the covenants, of loan, and take control of mortgage assets if payments are not done on time. Of mortgage assets if payment is not done on time. This will create operational disruption. This is not done on time. This will create operational disruption. Okay, so this will be the impact. This will create operational disruption. Your operations will start to suffer. Okay, so this will be the impact when you don't repay the loan interest or the installment on time. See, it is not necessary that every time the impact will go to profit, cash flow, going concern. Operational disruption automatically affects your profit. It's very clear. So first you identified it, the risk that you may not repay the interest or loan payment on time. Impact. Bank will enforce the mortgages, bank will enforce the covenants, and this will create operational disruption. Let's think about an evaluative comment, the scale of the risk. Look at the scenario. Obviously, we don't have a scenario now. Let's assume that scenario. For example, if the profits are declining, if the sales are declining, if the cash flow is already facing a burden. So an evaluative comment can be that declining profit margins increases the risk of companies' inability to pay the loan on time. Because when there are declining profits, when there are declining cash flows, in those time we face difficulty in our fixed cost payment. Okay? Profits of company X are already declining. We are just assuming this situation, okay? Are already declining and they have fallen by X percentage. You get a mark for calculation also, additional zero point 0.5 mark. And they've fallen by X percentage during the year, which increases concerns on inability to pay fixed interest cost, inability to pay fixed interest cost. Okay, so if you look at it, while I draft each of the risks, my entire focus is on the writing approach. I have broken it into pieces. First, let's identify the risk. Read the scenario, identify the issue. That okay, the gearing is high. The company has taken too much loan. So what is the risk? Now what students do is they simply write the loans are very high. Loans are very high is not a risk. The risk is your inability to pay the interest cost or loan installment on time. That is your risk. Then impact. What happens if you don't repay the loan on time? What happens if you don't pay interest or loan installment on time? The bank will enforce the covenants, the bank will enforce the mortgages, they will take control of the assets. Your business will suffer. Comment on the skill, the evaluation comment. The intensity of the risk is very high, that profits are already falling, and in times of falling profit, our ability to pay the fixed cost is very less. So talk about that. Okay, it creates concerns on the company's ability to pay the fixed interest cost. So if you look at the example business risk, it is all about following the writing approach. And when you are studying with me, it will be very easy. I will break the things into easier parts. Okay? And obviously, when we'll do practice of past papers, you will understand the things in a more better manner. Are you getting it? Let's write one more last risk and then we'll look at the examiner article. See, the class is pre-recorded, so wherever you feel that you are tired, you can simply pause it and then you can resume it again. But make sure that you are fresh throughout the recording. Okay? Now, let's write one more risk. For example, if the company is doing foreign purchases, think about a risk in it. For example, if you are doing foreign purchases, let's identify the risk. Think about this situation. When you are doing foreign purchases, your risk is adverse exchange rate movement. Now, if a student just repeats the scenario that company is buying goods from supplier A, who is a foreign supplier, full stop. So, where is the risk? You just repeated the scenario. The risk was that there will be adverse exchange rate movement and that will increase your cost and that will affect your profit margins. Okay, so don't repeat the scenario, identify the risk. Let's do it. Adverse exchange rate movement, adverse exchange rate movement is one of the risks faced, is one of the risks faced by company X due to its foreign purchases. Okay, due to its foreign purchases. See, you identified it. What is your identification? Adverse exchange rate movement. Now, what will happen? Think about it. What will happen if the exchange rate moves adversely? Your cost of import will increase. That will lead to reduction in profit margins. Okay? Adverse exchange rate movement will increase. Exchange rate movement will increase cost of imports, which will reduce profit margin, which will reduce profit margin. Okay, so first you identified the risk that adverse exchange rate movement is one of the risks faced by company X due to its foreign purchases. What is the impact? If the exchange rate will move adversely, it will increase your cost of import, and as a result, your profit margins will reduce. Let's think about scale of the risk. Anything in the scenario. So that can be that profit margins have already declined this year. You need to calculate it. Or that scale of the risk is that company is not using any hedging technique or any forward exchange contract to manage this risk. This risk is higher. This risk is higher as company X is not using any forward exchange contract or hedging technique. Any forward exchange contract to mitigate this risk. Okay, so the scale of risk is higher. Or you can say that maybe our foreign purchases are a too much percentage of total expense. So if there will be a slight movement in an exchange rate, our total cost will show a greater increase. Like for example, if we are importing a key raw material, so a slight change in exchange rate will affect our cost of sales by a greater ratio. So anything in the scenario which can affect the scale of the risk. So if you look at our discussion, see, we have just done our discussion on business risk, exam focus. Now we look at examiner article also. Examiner article on business risk will not include anything new, but it will give you a confidence that, okay, you have covered examiner drafted document also. See, my approach is to teach in very much detail. All the concepts, all the writing approach, exam focus, each and every examiner article, then all the past papers, classwork, homework, feedback, everything in detail. Because I want to make sure that you pass in first attempt because obviously you are paying a heavy exam fees also. Okay, it's not just about tuition fees, it's your time and the exam fees which is getting at risk. So first of all, we discussed that what audit planning is. It's a mandatory phase of audit activity where auditor plans the entire audit engagement. Okay, the auditor obtains understanding of the client's business environment, plans materiality level, performs risk assessment. We discussed all of this. Then we had discussion on risk assessment, three types of risk: business risk, risk of material misstatement, and audit risk. Then we discussed that what the business risk is. We discussed different examples. I hope you all remember. Okay, this all was discussed in the today's class. Then we move towards exam focused discussion, which is obviously very important when you are going for the exam. You can have an 8 to 15 marks requirement on business risk. You have to evaluate the scenario and discuss significant business risk included in it. For every business risk, you have technical marks and you have professional skill marks. Identify impact scale of the risk. For every calculation, you get zero point 0.5 mark each, maximum 3 marks for calculation. Then we discuss about professional skill marks that they will be available on question as a whole, but you have to demonstrate your professional skill while writing the risk. Okay. Then we discussed that examiner will make you an audit manager, so you have to make sure that you write impressive answer. Then we drafted some sample risk in which we followed the approach identify, impact, and scale of the risk. Okay. Whenever you write a business risk, you are getting marks for commercial acumen in the professional skill head. You get marks for communication when you give headings and you use proper wording. You get marks for analysis and evaluation when you relate it to the scenario in good manner. You get marks for judgment when you have the ability to pick up the significant risk. Okay? So I have made sure that you have covered all of the things. Now let's look at the examiner article on this topic. When we look at the examiner article, it will give you further confidence because this is a document prepared by the examiner himself. This also includes the guidance that how you have to draft the business risk. Okay, let's look at it. Exam technique 1, planning questions and risk part 1. Now this question article is on business risk. We also have article on risk of material misstatement and audit risk. We'll be discussing them when we'll be on that relevant topic. So now let's discuss this article on business risk. It includes complete guidance that how you have to draft the business risk. Okay. Obviously, we have covered all of this in detail already, but the purpose of doing this article is to give you more confidence that how you have to deal with the exam scenario. Okay, so let's read this article. I want you all to listen to me carefully. We'll read it and discuss each and every issue included in it. Okay, let's look at it. Okay, so now candidates will be tasked with a question set at the planning stage of an engagement in section A. So as I told you earlier also that audit planning is tested in question number 1, which is section A of our exam. This will require candidates to evaluate risk relevant to an audit or assurance engagement. This article is intended to help candidates to achieve both the technical and professional marks usually associated with these type of requirements. So we have already discussed that audit planning question will come in question number 1 and it represents 25 to 30 marks in total, the audit planning. Now within audit planning, risk assessment represents 20 to 25 marks. Remaining marks will be from theory areas of audit planning, like you can discuss issues relating to materiality, audit strategy, audit program. Okay, we look at those areas also. But currently, we are talking about risk evaluation because this will be the first requirement which you will be getting in your exam. And obviously, it is important to learn this skill because it represents 20 to 25 marks in your exam. Within risk evaluation, we are talking about business risk, which can come for like 8 to 15 marks. And then risk of material misstatement, and then audit risk will be included. Now, ISA 315, identifying and assessing the risk of material misstatement, gives extensive guidance on the need to understand the client's business, controls, and operating environment in order to assess the risk on the engagement. One important thing, you are not required to learn the references of ISA. Okay, you are just expected to understand the concept and apply them while dealing with the client scenario. Audit risk arises through these risk of material misstatement, but also assess the risk that these may not be detected during the audit process. Audit risk is a situation when auditor gives a wrong opinion, and that happens when auditor is unable to detect these issues. Okay, so obviously he's introducing the topic before moving towards business risk. Candidates are tested on their skills in identifying and evaluating these risks. Now here he gets focused on business risk in audit planning question. ISA 315 explains that understanding the entity's objective, strategy, and business model helps the auditor to understand the entity at a strategic level and to understand the business risk the entity takes and faces. See, when you are talking about evaluation of business risk, it is very important that you take understanding of the client's business and its environment. When you take understanding of the business and environment, then only you are able to evaluate the business risk. And then these business risks ultimately affect the financial statement because it can lead to issues like going concern, impairment, provisioning, inventory write downs. Okay? An understanding of the business risk that have the effect on the financial statement assists the audit in identifying risk of material misstatement. Since most business risks will eventually have financial consequences and therefore an effect on the financial statement. So see, all of the discussion which we are doing in the article, we have already covered it in the earlier part. But we are just discussing the article so you can have more confidence since you are covering an examiner drafted document. ISA 315 defines business risk as a risk resulting from significant conditions, events, circumstances, actions, or inaction that could affect an entity's ability to achieve its objectives and execute its strategy, or from the setting of inappropriate objectives and strategies. So, as we discussed earlier, also, that business risk is anything which affects the entity's ability to achieve its objectives. Now, what are those objectives? Going concern, profits, cash flows. So anything which is affecting the entity's ability to achieve its objective, to go as going concern, to earn profits, to generate cash flows, that will be regarded as business risk. Okay. Again, I'll say it, refer it again because some students may get confused. You are not required to learn ISA references or its definitions. Just understand the concept and it will get crystal clear when we'll be looking at past paper questions. And even in this article, some example business risk are drafted. You are not required to refer any ISA or its definition. The examiner only says understand the concept and evaluate the scenario well. A typical requirement in Section A with a focus on business risk would be using the exhibits provided, evaluate the significant business risk facing the company or group. The key element to consider for this requirement denotes are as follows. Like you have to use the exhibits, you are not required to use external information. You have to evaluate the risk, you have to look at the factors which increase the scale of the risk, and you just have to focus on the significant risk, ones for which examiner has done sufficient discussion in your question. So first, let's look at exhibits. Exhibit means attachments, the information available in the question. You are only required to evaluate the risk from the information which is available in the question. No background knowledge from your old studies is required. Just read the scenario well and pick the risk from it. Candidates are not required to have any industry specific knowledge. There will be sufficient detail in the scenario to allow candidates to identify the key risk which should be evaluated. Candidates should focus on the risk arising from the information provided and not speculate on any additional risk which may arise. So you don't have to use any background information or speculate or predict the things. Just focus on the data given in the scenario. Okay. See, this all is discussed in our earlier discussion. But this article will give you more clarity since it is a document prepared by examiner. Okay, let's look further. Evaluate. Evaluate means that you just don't stop at identification. You have to discuss the impact, you have to talk on its scale, you have to evaluate the risk completely, you have to discuss it. Just pinpointing it will not gain the marks. In order to evaluate effectively, candidates will initially need to identify the risk arising from the information provided and illustrate the impact of the risk. That what will it do? What will happen if that risk materializes? Candidates should make use of specific points that are relevant to the client in the question rather than discuss them in generic context. You have to relate it to the scenario. Candidates should then expand on this issue in order to fully evaluate the point. There need to be an assessment of the scale of the risk, the intensity of the risk in the context of scenario. For example, an illustration of why the risk is particularly significant for the client or discussing how the impact might be increased in light of other risks and information relevant to the scenario. So you have to read the entire scenario and pick up the point that, okay, these are the factors which are increasing the significance of the risk. And then most important thing, you don't have to refer all risk. You have to refer the significant ones only. Okay. In the context of AAA exam, it is essential that candidates assess significant business risk within the scenario. These should be assessed as those issues which are medium to high likelihood of occurrence and impact after consideration of any mitigation which is described in the scenario. So there are some business risks for which it is clearly written that company has covered this risk or they have taken the relevant actions. Then you shouldn't be referring those risks because those risks are already mitigated. Mitigated means they are already reduced. So you have to refer the significant risk. And what are significant risks? Which have chances between medium to high. The low risk are not the significant ones. Okay. So see, first we define that what are the expectations in section A. You will be given a question on audit planning in which there will be a requirement on risk evaluation, which can include business risk, risk of material misstatement, and audit risk. And then we started discussion business risk. Anything which affects the entity's ability to achieve its objectives like profits, cash flows, going concern. And in the examination, the requirement will be using the exhibits, which means that you don't have to refer any external information. And even if this wording is not written, then also you are not required to refer any external information. Just focus on the question scenario. This applies on the business risk topic. That just focus on the question scenario. Yes, in ROMM and audit risk, the examiner says that you should have accounting knowledge in risk of material misstatement and audit risk. But in business risk, you are not required to have business knowledge or industry knowledge. Just look at the information given, the detail given in the scenario and in the exhibits. Okay, so look at the information given in the scenario. Don't speculate things. Number one. Number two, evaluate it. Number three, look at the significant risk. Okay. Now, risk. Business risk in the context of triple exam are areas of uncertain occurrence and outcome, not factual statement of something which has already happened and therefore is already fully quantified in the scenario. See, risk is something which may happen. Things which have already happened are not the risk, those are the reality. So you have to refer the risk which may happen. That okay, this may happen. So that is a risk. Penalty may get imposed. Reputational damage may occur. Okay, the things which are uncertain, those are the risks. Now the examiner is discussing one exam question, one sample question with you people, and then he'll draft some risk which can give you more clarity that how you have to do drafting in your examination. Okay, this will be a very good guidance. The examiner's own drafting is given in this article. Let's look at it. Consider the example below from September 2022. Published question, Winberry Company, a listed food delivery company whose sales are made entirely online. So we are given with a paragraph relating to a question, Winberry Company, which was examined in September 22, in which the company makes online sales. Okay, and entirely it is doing online sales. Okay. 2 months ago, Winberry Company suffered a cyber security attack in which the personal information of 2,500 customers, including their credit card details, were stolen. Think about the business risk. From your system, there was a cyber security attack and information of 2,500 customers got stolen. It is a regulatory issue. You may face fines for it. Your controls were weak. And number two, you will also face reputational loss. If the customers will get to know that from your website their credit card detail got stolen, they will never be willing to do business with you. And consider this thing, you are doing entirely online business. So your whole dependency is online. And if this thing gets public, it's a big risk. Risk of regulatory fine, risk of reputational damage. According to the representatives of the audit committee, the company's internal audit team had not properly assessed the risk relating to cybersecurity. It's a clear failure of controls. It was completely an issue at the company's end, which is a requirement of data protection legislation in the jurisdiction in which Winberry Company operates. The issue which led to cybersecurity attack has now been resolved. Winberry Company did not make any reports of the breach to regulator. See, we have resolved this issue, so this will not happen again in the future. But what has happened? What has already happened? If that comes into the regulator knowledge, get ready for the penalties. And the risk is high because you have hidden it. You are not making it report to yourself. Okay, it is a requirement in the jurisdiction in which Winberry Company operates that this need to be reported, and we have not reported it. So if the regulator will find it himself, then get ready for the heavy penalties and the fines which will get imposed. And obviously the reputational damage will be very serious because 2,500 customer detail has got stolen. I agree that this incident will not happen again, but what has happened if it comes to the knowledge of the regulator, if it comes to the knowledge of the customers, fines and loss of reputation is a very big risk we are facing. Okay. Now, this was the actual exam scenario. Now, let's see how the examiner has given you some sample points. In this question, there are several different related risks which a candidate might identify. This topic will only be treated as one risk, regardless of which of those are developed, and marks will be available for development of many alternative points. So he has discussed many alternative risks, but the student had to draft any one of them. Okay, like in this risk, there was issue of penalties. Here, there was an issue of weak controls, that the audit committee was not working properly. Internal auditor didn't evaluate the risk well. There was a risk of reputational damage. So student can write any of one risk. Like it's not like he write three risks from one scenario. He can refer any one of them and gain the marks. Identification of the risk. Initial development means impact, and further evaluation means scale of the risk. Comment on intensity. Okay, see how he develops the risk. Data breach may come in public knowledge. Risk that if this incident comes into the public knowledge, then it will be a big risk because then we lose reputation. Then the regulator will also impose fine. Basic identification. The risk is that this issue may come in public knowledge. What will be the impact? The company will suffer reputational damage and lose customers. Or customers will no longer trust Winberry company to protect their online data. Impact. Scale of the risk. Just think about it. Just think about it. Your business is entirely online. And if the customers will lose trust on your website, your entire business will suffer. Think about it. You are hiding it from the customers. Their trust will be shattered when they will get to know that first the details got stolen and then you hide that information. At least you should have informed them, so they should have blocked their credit cards. So scale of the risk. The fact that the company did not report the breach themselves may increase the reputational damage which would have occurred had this been disclosed immediately. Because now their trust will be shattered that the company is not honest in its dealing. See, you lost our details and you didn't even inform us. We would have blocked our credit cards. You hid that information from us. This increases the scale of the risk. This increases the intensity. Okay. Considering severity in the context of the delay to reporting described in the scenario that it was a serious issue. Or the lack of trust in the website if customers do not trust Winberry to protect their data is a significant problem as Winberry company only operates online and has no physical stores or outlets. So seriousness of the risk is increasing. So see, this was the example drafting. Identify if it comes in public knowledge. Impact, reputational damage. Scale of the risk. You are hiding it, or you can write that the customers will lose trust. Okay. So see, exactly same writing approach which we followed. Identify, impact, scale of the risk. Identify, impact, scale of the risk. Okay. So just try and understand the approach. Or some students may have focused it on the fines. The company might be fined of data breach. See, one possible risk was reputational. Now, second possible is in perspective of regulator. The company might be fined for the data breach. Impact, this will put pressure on cash flows and reduce profit. Evaluative comment, you are hiding it from the regulator, so get ready for a serious penalty being imposed. These might be higher as a result of Winberry company not reporting the breach themselves. Considering severity in the context of the delay to reporting described in the scenario. The fall in profit may lead to the breach of banking covenants. If you further go in detail, like for example, if there is a penalty and that penalty results in falling profits, then maybe the company is not able to fulfill its bank covenants. Like for example, there are usually bank covenants of maintaining interest cover ratio or bank covenant of maintaining the profits at certain level. So if we breach the regulatory requirement and we face a penalty, it may result in breach of bank covenants also. See, when a bank gives you a loan, there is a covenant that, okay, you have to maintain certain level of profit. So when you face a penalty, your covenant gets breached. Or another perspective, further data weaknesses may exist and may not have been identified. Relating to weak controls, because internal auditor defaulted one time, so he may have defaulted in other areas also. There may be more serious breaches where customer credit card or identity details are stolen. Maybe other than these 2500, other losses may also exist. This will lead to more severe fines and bad publicity if this is the case. So, see three possible draftings. One, reputational damage due to this incident. Second, fines. And third, weak controls create a risk of other issues also. That when the internal auditor failed in this area, maybe there are many other failures in the business. That is also a risk. So if you look at the examiner drafting, see, he's following the same approach as I guided you earlier. Identify, impact, scale of the risk. When a student is going for a AAA exam, his knowledge of auditing and accounting is important, but at the same time, equally important thing is drafting approach. Now, I'm not saying this, the examiner is saying this. This article is written by the examiner that the drafting approach is very important. You have to learn that how you will develop your answer. If you are not developing in a proper manner, you will continue failing the exam. And you will always say that, sir, I attempted a good paper. Why did I fail? You have to learn the approach of drafting the answer. Otherwise, you will continue failing it. These examples are indicative, not exhaustive. Like some students can write the risk in other manner also. Okay. And candidates will be awarded credit for valid evaluation points which relate to the scenario. So if someone has done any other possible drafting, that is also acceptable. Like these were just example points. Like examiner always reads your risk and then he gives marks on it. It is not like that he say that, okay, you have to evaluate in my manner only. You can draft it in other manner also, like you can include other comments also. But your risk should demonstrate three steps. Identify, impact, scale of the risk, which is the evaluative comment. Now, professional marks associated with the business risk. In most cases, the professional marks available for evaluation of business risk will be commercial acumen. Because as I told earlier also, business risk is all about commercial acumen, the practical sense. Now, these will be awarded in addition to the technical marks. Yes, we know this, that every business risk will be marked from two perspectives. Candidates will be awarded credit for professional skills when they demonstrate awareness of potential commercial acumen. Like they demonstrate the long term perspective, they have that commercial approach, they can evaluate the business risk in detail. Examples where commercial acumen should be demonstrated in response to the above scenario. Management's failure to report the breach may lead to more serious consequences. The student's ability to evaluate the scenario and his ability to pick the point that, okay, management is hiding the fact. So, hiding the issues will lead to more serious issues. This is your commercial acumen, that you have the ability to look at it practically, that hiding things is not good. There is additional risk of specific reputational damage, which could impact the share price as well. So, if someone extends it to the share price, that also indicates your commercial acumen. Linking the impact of any fine to debt covenants or interest cover, that when the penalties will be imposed, maybe the company will not be able to fulfill the bank requirements, the covenants, the requirements imposed by the bank. Linking the severity of the risk of the company being online only and therefore more exposed to the consequence of data risk than a traditional retail outlet of groceries. See, for this company, the risk was higher because they were only online. So you get professional skill marks on your existing drafting. You just have to show that you relate to the scenario well, you evaluate it. You have that commercial approach to evaluate the risk in a better manner. Okay? It is possible to evaluate a risk severity in relation to the scenario without demonstrating commercial acumen. And it is also possible to demonstrate acumen in a risk not considered fully evaluated. Like what he is saying is that maybe you get full marks in technical and zero in professional skill. Or maybe you get a professional skill mark, like you show your commercial acumen, but your risk is not complete technically. Whereas a single response does provide evaluation and demonstrated commercial acumen, credit will be awarded for both. The professional marks are additional rather than in place of technical marks. So, what he is saying is that for every risk, he will look at the technical perspective and professional perspective separately. Maybe you didn't show professional skill, but your answer was technically correct. So you'll get the technical marks. But since you didn't show the commercial acumen, the long-term approach, you will lose the professional skill. But at the same time, maybe your commercial acumen in a particular comment was very good, but the examiner didn't consider it as a significant risk. So you will lose the technical mark, but you will get the professional skill mark of commercial acumen if you evaluated that risk in a better manner. Okay, so these both things are additional. Like the examiner will evaluate both of them separately. Okay, he first read your risk from the technical perspective that okay, is it technically correct? And then he read it again that whether it's professionally correct or not. Candidates should also note the following will not obtain marks for the identification and development. Following things have no marks. Facts given in the question, as I told earlier also. Repeating the scenario, repeating the information already available in the question. You will not get any marks for it. So please don't repeat the information already given in the question. There has been data breaches, credit card details may be lost. It is already stated in the question. Directly come to the risk. That risk is that the reputation will get damaged. These are known and therefore not a risk. The risk is something uncertain as a result of event or uncertain event. So if you are talking something which is already done in the scenario, which is already stated, that is not a risk. Risk is further exploration of it. Risk is further extension of it. Risks which are flagged as mitigated in the scenario. Mitigated means those risks which are already covered, which are already solved. So you shouldn't be stating those risks which are already solved in the scenario. Like if someone states that this incident may happen again, so it was already stated in the scenario that they've already covered this issue. However, the risk was that other breaches may also exist. This same issue will not repeat, but there may be other breaches due to weak controls. In case of Winberry Company, the scenario was clear that specialist staff was employed to ensure food safety legislation. Now he is referring to some additional information of that particular question here. Okay, please make it clear. This is not given in the scenario which was provided above. So he's just giving you an example. Was complied with as part of the company's risk management strategy. In the actual question, it was written that in relation to the food safety regulation, company already has employed the specialist staff. So when the company already has employed the specialist staff, the student shouldn't be referring this risk again. These are likely to be easily replaceable given the ubiquitous nature of the food. This might be different in particularly niche industry where experts are less readily available. Okay. So you shouldn't be writing this risk relating that company may fail to comply with food safety regulation because the specialist staff was already employed. However, instead of this, you can write that company's food may expire and as a result, it may face inventory losses. Ubiquitous nature means sensitive nature, the perishable nature, that it may expire and as a result, company may face inventory losses. But if you would be writing a risk for breaches of food safety regulation, which was already covered in the scenario, because the company has question has clearly stated that company has the specialist staff. So it would be referring a scenario which is already mitigated, which is already covered. So if anything is already covered, you shouldn't be referring that risk. So you should have replace it, write something else like perishable inventory item may go obsolete and as a result company may face losses. Something different. But if you're writing a risk which is already mitigated, which is already covered, then you will not get marks. And extreme outcomes which are not likely to occur, which I stated while I was writing a risk of high giving. Like what students do is they simply jump to bankruptcy. That company will not be able to repay the loan and as a result it will go bankrupt. Why it will go bankrupt? It will sell the assets to repay it. Why going to bankruptcy directly? For example, the data breach will mean fines the company cannot afford to pay and it will be bankrupt. This is extreme. Why the company will go bankrupt? Company will sell the asset and pay the fine. Will take loan and pay the fine. Why thinking of so extreme situation? Whilst worst case scenarios exist, if this is not likely in the context of the specific scenario, then it's not necessarily a significant risk or appropriate evaluation. The outcome might be valid in a different scenario, perhaps where a country has a severe history of data breaches with total disregard for data protection and the company was already loss making, experiencing cash flow issues. Then going bankrupt would be a situation. But in a normal situation, when a company faces a fine for the first time, why it will go bankrupt? It will sell something, it will take a loan, it will negotiate with the regulator, and it will settle. Why it will go bankrupt urgently? Candidates are expected to tailor their answer to the specific scenario in the question. This is demonstration of professional judgment, which is an important skill of auditor. And then finally, this article is summarized. The examiner is summarizing that, okay, business risk is an important part of your question exam, and he has briefed you the entire writing approach that you should be following. Identify impact and scale of the risk. Don't speculate. Focus on the question information. Okay. Candidates preparing for the AAA exam should be mindful that they will be required to evaluate risk in the context of specific information provided in a scenario of the exam. The examining team are looking for depth of evaluation of significant risk rather than brief, untailored answers. Untailored answers means general answers. They are not looking for general answers. They are looking for specific scenario specific answers. Candidates are recommended to use past published questions to practice evaluation skill. Yes, we will do. We will do past papers. Exam question practice is essential, but candidates should remain mindful that they should not try and apply rote learning, like learning the things. Because as I told earlier also, that in AAA, rote learning, rutification is not examined. You have to deal with the scenario or generic responses in the real exam. They should ensure that their answers in the actual exam is tailored to the specific information provided in the question. Otherwise, little credit will be awarded. Well prepared candidates using good technique often achieve full marks in risk question, and this is often indicative of those candidates demonstrating the required professional skill of an auditor. So if you look at this article, it didn't include anything new, but it gave us good examples of what the examiner is expecting from us in the examination. So if I just revise my today's class, in today's class, yes, it was a bit long class because it was a class relating to the topic. But from the next class, when we'll be moving towards the past papers, the classes will be much easier and smaller. But as I told you during the class also, that whenever you feel tired, you have a pause button. You can pause me, get refreshed, and come back again and join. But make sure that you listen to this class carefully because this was an important discussion relating to audit planning. So if I just give you a quick review, audit planning, one of the important topic of your exam. It can be examined for 25 to 30 marks. It is a mandatory phase of audit activity and a mandatory question of our exam also. Because an audit activity which is not well planned will not result in a good quality audit. So audit planning is very important. Auditor should obtain the understanding of the client's business, his environment. He has to plan materiality level. He has to plan deadline. He has to plan a proper team. He has to plan proper procedures. So this all is included in audit planning. Audit planning shouldn't be only in your mind, it should be documented. Two documents need to be prepared. One is audit strategy, and other one is audit program. Strategy is overall planning, and program is head specific planning, which the auditor do. We'll discuss these theory areas in the end of the chapter. Then we move towards risk assessment, that within audit planning, the total 25 to 30 marks of audit planning, 20 to 25 marks are given to risk assessment. Again, a very important topic for our exam and practically. Since auditor is giving reasonable assurance, it is very important that he perform risk assessment. He has to identify the high risk areas and then focus more on those high risk areas because then only he will be able to give opinion on the financial statement as a whole. If the audit would be absolute assurance, then there would be no requirement of risk assessment because in that case we would have audited everything. But now we are not auditing everything. We are giving reasonable assurance. We are giving opinion on the financial statement as a whole that it gives true and fair view. So for that, we need to perform risk assessment. We need to pick up high risk areas and focus more on them. Okay. Then in risk assessment, there are three risks: business risk, risk of material misstatement, and audit risk. Then we move towards the business risk, which is our first topic which we are covering. Anything which can affect the entity's ability to achieve its objectives, profits, cash flows, going concern issue. These all are the business risks. In the examination, you will have to evaluate the client scenario and discuss the significant risk included in them. Rote learning, learning of the knowledge is not examinable. You have to develop the ability to evaluate the scenario. For business risk, you need to evaluate your technical skill and professional skill both. Okay, from technical skill perspective, we looked at the drafting approach, and for professional skill also we discussed that you have to show your skills of communication, evaluation, analysis, judgment, commercial acumen. Okay, business risks are important for an auditor. Why business risks are important for an auditor? Because these business risks can have impact on the financial statement also. Like they can lead to impairment situation, it can lead to obsolete inventory situation, provisions. Okay. And then we discuss some example business risk which we can find in our examination. Then the most important discussion was started, the exam focused discussion, that in the examination we can have a requirement between 8 to 15 marks. We will have other risk also, like risk of material misstatement or audit risk being examined also. Students will be required to evaluate the business risk in the client scenario. You will be provided with all information in the question. No background information is required. You have to look at significant business risk only, not all risk, the significant ones, which are referred in detail in the exam question. Then we looked at the drafting approach, how we have to develop the technical marks and the professional skill marks. We looked at that. Then we drafted some example risk in our class. And then we covered this technical article on drafting on business risk, which didn't include anything new, but it was a good guidance given to us by the examiner. We've already covered all of this during our above discussion, but reading of article is obviously important because it gives more clarity to the students and the confidence that yes, they can do that particular topic. Okay, we looked at the article, we looked at example drafting by the examiner, which was very good thing, very good guidance. We looked at how we have to look at the identification, impact, and scale of the risk. We discussed all of these issues, professional skill marks, what we have to make sure that we should be avoiding, like we shouldn't be repeating the things, we shouldn't be referring the risks which are already mitigated, and we shouldn't be looking for extreme situations. And then we finally summarize this issue. Now, in the next class, we will start past paper practice of business risk. We'll be doing actual past papers on the exam software. From the very start, we'll be doing the actual practice of the past papers and on the exam practice platform, which will give you a lot of confidence that how you have to deal with the actual paper and the exam software. We'll do almost 5 questions on business risk, and then I'll give you 3 questions as a homework, which you have to attempt and send me for feedback, my personalized feedback, which is obviously very important. So I hope that you people have understood all the discussion. If you have any query, you all have my WhatsApp number, my direct number. You can message me here and ask me anything. Okay? As far as drafting of answers is concerned, there is nothing to worry because from the next class, we'll be moving towards past paper discussion. I hope that you all have understood all the discussion which we have done today. And if you have any query, feel free to contact me on my WhatsApp. Thank you, everyone.